So I put together an example, much like Vince's. This is a very typical scenario for one of our clients who's debating whether to buy now or wait a year. And for me, I'm always about wealth building. If you wait a year to buy, you will absolutely save a little bit of money in your payment. Vince showed us that on his chart. Of course, we'd like the payment to be a little bit lower. In his example, 1% equaled, I think it was $250 a month. So I ran an example a little bit different. Still, I did a $500,000 purchase, same as Vince. I was comparing it to somebody who's paying $2,200 a month in rent. And I was very conservative here. And I said, look, let's just say housing appreciates at 3%. So generally housing will appreciate at least with inflation, which we know is high right now. But I just, for the sake of argument, I just picked a lower number and I said 3%. So I have the two scenarios here. Somebody that bought this year with a 10% down payment. That means they need $50,000 cash. And so I'm over on the left-hand side of this slide now. So they needed $50,000 in cash and the interest rates are at 7%. So there's the P&I payment on that, the principal and interest. So that's just the loan portion. Now, if they wait a year, the rates come down to 6%, let's say, and so their payment comes down. That's true. Vince showed us that. But what happened in the meantime is that the property appreciated by 3% because we have this supply-demand inequity. There isn't enough supply, so prices will continue to go up. So that $500,000 house, we now need $515,000. We now need an extra $1,500 for our down payment. So when we're talking about just money saved, short-term cash, that's this box on the upper right. We need $1,500 more, but we've saved almost $2,600 in payments. So the net is that, yes, we saved a little over $1,000 by waiting for 1 year. But let's talk big picture and the wealth that we've lost in that year. Well, we missed out on 1 year of appreciation. So that's $15,000. Is it cash in your pocket? No. You don't get that until you sell, but it is part of your wealth building. And then the big elephant in the room is your rent. 12 months of rent is just gone. You have nothing to show for it. And 12 months from now, you're probably still going to have at least this level of competition, but probably more because there are buyers that are waiting for rates to come down to 6% or 5% or lower. So there will be more buyers with every rate drop, which might push prices up even more than that 3%. And we're talking about waived contingencies and super competitive markets. So the wealth lost is over 41,000. And then the unknown is how much more competition we're going to be facing. So this is the picture that I try to paint for people of money saved versus wealth lost. And that's what you need to be thinking about. What is your goal in buying a house?